the class for financial plan and strategy. Today's class, the idea is for us to, for me and Karina, to introduce ourselves so you can know who we are. I'm seeing that I gave class to some of you, and also Karina gave you class to some of you guys, Pablo and Nayeli and all. So I think you already know us, but formality is established that we have to present ourselves. So that's what we're going to do today. We're going to talk about the case scenario. I'm going to show you where to download the case scenario. We're going to see the competencies the course it's trying to accomplish with you guys. And we are going to get today in content for my class. So I'm going to explain you what is the distribution of content for the course, so you guys can start think about what you're going to be learning today. Okay? Not today, I'm sorry, for this course, this month, these 5 weeks. So my name, ladies first, Karina, please.
Okay. Hi, good morning. Well, my name is Karina Arellano. Some of you were my classmates, so it is a pleasure to see you again. Well, now through a screen, which is not funny enough, but well, that's what we have. And well, I've been working with Chris during this last week. It was a pleasure. I know for sure that we are going to be learning a lot of interesting things. And well, as you know, I've been working for Tecnológico de Monterrey for the last 3 years. I'm involved in Tech21 since the beginning and still working in Tech20, the old platform for financial analysis. Some of those guys will be graduated this next month, which is great for them and for me to see them get hired for interesting companies or participate in other challenges. And for you, of course, it is quite interesting to see how many things you will be learning during these 4 or 5 weeks, because this is a quick reminder that life is not, it is very fast, so we need to reach a lot of good knowledge in order to set in place in our own businesses as entrepreneurs, or if we start participating in a good company, well, this is the time to participate with good and interesting elements to make good decisions at the end, to make financial planning, which is, as Chris said, not a good thing to do nowadays. Nice to see you again, guys.
Thank you, Karina. Well, you're welcome. As Karina just pointed out, we've been working the past, I think 2 weeks, maybe 1 week and a half. The idea was to redesign the course because it was brought to our attentions as teachers that maybe courses right now, because we are in home office, homeschooling, are a bit too difficult because all the situation is a little bit tiresome. So we redesigned the course, and the idea of the course and the selection of the problem case scenario is for you guys to see something more practical and have all your energies, homework energies and class energies in solving the case, all right? So all the homeworks are gonna be about the case and all of that. Well, I am Christopher. I already I saw some of you already know me. I studied at Tech. I am an accountant. I hold a bachelor's degree on accounting and finance. I have a master's degree on taxations, and I used to work doing financial analysis and cost accounting. Then I dropped that and I started a business where I do this most of the time. Actually, one of the company actually that we are going to be seeing is loosely based in one of my customers. So the idea is, not the idea, the point of what I'm telling you guys is that you can see that the information we are going to be sharing with you here and the things you're going to be learning are actually valuable lessons that you can sell as an accountant or as a consultant, financial consultant in the future, working inside corporate finance or working as an independent professional consultant. So that's who I am. The objectives of today's class is, of course, get to know each other, your teachers, Karina and I. We're going to be in co-teaching. Half the course is going to be taught by me. That is only the part of administrative accounting, managerial accounting, that is. And Karina is going to be in charge of financial analysis part of the course. So week 1 to 2 are managerial accounting part, and then the week 2 to 4 is the financial planning part in charge of Karina. And of course, all of that is designed around the case scenario. Basic information, classes are Tuesday and Friday from 9 a.m. to 11 a.m. We're gonna try to end class like 10 minutes before. I'm gonna do my best to do that. And the idea is at the end of the 5-week period, you are supposed to, no, you are not supposed, you will have to deliver 2 individual evidences. So you need to start working on the case as of for now. That is, work on it, it's individual, and you have 5 weeks to complete it. I think it's plenty of time. Karina and I solved it on Sunday, so you can do it. I mean, if we could do it in an afternoon, you can do it in 5 weeks. There is no problem. I'm pretty sure it's gonna be really interesting for you guys. So let's go to Canvas. First part is to review Canvas now, and we're gonna review the content.
Okay. Solo interrumpo mientras cargas. Cris, te ayudé a tomar asistencia para que tú hicieras la presentación. No veo a Vale González. ¿Sí está aquí? Ok.
Aquí es Vale González, I guess.
A lo mejor fue por unas quesadillas. Ok, entonces pongo, es que yo aquí veo 25 registros, pero tú en Zoom, ¿cuántos ves? ¿20?
24.
Ah,
pero
ok,
no somos nosotros. Entonces son 22. 22.
Ok. Entonces, Alex, no sé si pongo asistencia a todos. ¿Lo quieres así de momento?
Sí, y lo que yo hago después es que me meto a Canvas y los que no están adentro conectados les quito.
Perfecto. Listo. Gracias.
Okay. Thank you, Karina, for that. So let's review the information. This is Canvas. Please go inside Canvas and see the access link to Zoom. Right now, the link is directed to my Zoom account. After these 2 weeks, we're going to change it to Karina's account, and she's going to be the host. As of for now, that is the information you need to know regarding the Zoom classroom. Okay, next we need to review competencies. Let's go to the part of competencies. There are actually only two basic competencies in learning outcomes. So you have to develop financial vision and reasoning for complexity. If we were to just like summarize this into basic knowledge, I mean, basic things, stuff you need to do, it's financial statement analysis and your ability to build a really complex Excel spreadsheet. So the domain level in financial planning is C. So we are going to see a lot of financial planning there, and I'm going to review with you financial statements. Today's class objective is about that. We will review financial statements and work on the cash flow. The idea of today's session is to review cash flow until the indirect method, and then we're going to see cash flow for budgeting. That is cash budget of the master budget. And why is that? Well, if we go to the content, those are the competencies. And if we go to the content of the modules you're going to be learning, you'll see the class is divided between 2 parts, week number 1 and 2, and week number 3 and 4. The first part, which I am in charge of, it's managerial accounting. We are going to see financial statements, review cash flow, and then dive into cash budget. Then we are going to move to operational budget, and week 2, we're going to see capital expenditure budget, that is CapEx. It's really fast subject, so this class is mostly going to be about just reviewing concepts about capital expense, what is capital expenditure, how it's determined, and where you can find it. And then we're going to work from the second week. My idea for the second week is to work completely on the master budget. That is doing the pro forma of the master budget and you guys to build the master budget for the case. And week number 1 and week number 2, we're going to have 2 homeworks. Both homeworks are related with the case. The idea is that after 2 weeks, you already have financial statements assembled for the case, so you can work on analyzing them on week number 3 and 4, which is with Karina. Okay? So let's see now, if you don't have any questions about that, let's see now we were reviewing the content. I already told you this. And let's see the case scenario. The case scenario, well, this is a company, it's not the information of the company, which is really, really similar. And what I want you guys to know is that this is a real company. It exists in Querétaro. It's one of my customers. And I can tell you, it's a great company. They manufacture pots and pans. And the idea behind it is that you can see that the information you will be reviewing, we change it so it's not like for the company, but it can be applied to real companies. So that's the name of the case. And where can you find the document that you need to read? This is not a raw case, so don't worry, you won't have to get into the Centro Internacional de Casos. We already uploaded it. So you go to home, you click here in this arrow of the problem situation, and you'll find a brief explanation of the company, and here is the case you need to download. So please download that case. What I want you to do as soon as this class is please start reading the case, all right? Start identifying all the information that you need to be working with. It's all, for you to be easy to understand, it's all the paragraphs are numbered. So we are gonna be working with the number paragraphs, and the information is divided between all those paragraphs divided by, let me close this, I'm sorry. The information is divided by paragraph, and it's related with the operational information of the company, the cost information per unit, production lines, etc. So please check that, download the information, and start reading the case. There is no homework for today. This is just something I'm asking you to do because it's really important that you guys do it. Next session, I'm gonna leave a homework for the week, and basically the homework is gonna be for you guys to start building, gathering the information for the case. So if you haven't read the case, next session homework is going to be actually pretty difficult because you're going to have to do it all in one day. So please start working on that. Download the case and start reading the case, okay? So last but not least, we need to see the evaluation plan. So I go to home and evaluation plan, and there is a bunch of homeworks already listed there. We're going to erase that because we were working with Illumin and stuff, so we didn't erase them yet. But ignore if you have a notification for a homework today. There is no homework today. Total homeworks are going to be 4 homeworks, and we are going to be telling you what the homeworks are about as we move forward. What can I tell you about is that the homeworks I'm going to give you in week number 1 and 2 are going to be related with the case. The idea is for you guys to start working in the case as of today. Well, as of next class, mostly. No, as of today, because you need to download the case and start reading it. So that is the first thing you need to do. It's not a homework, it's something you need to do because it's part of your final deliverable. And see this, the evidence that you need to deliver at the end of the 5 weeks period, it's divided in 2. One is a written report on the analysis of the financial statements, and the other is the master budget built inside your work, your Excel spreadsheet. So you will be delivering this all individually. You will be, that will be an Excel spreadsheet and a PDF document, all right? The Excel spreadsheet is working on the budget and doing the forecast for the period indicated inside the case. And the second one is the report you're gonna be giving the CEO of the company, the owner of the company, like your opinion on the information you just analyzed. There are 4 homeworks, as I told you. That is the separation of the homeworks. Why are the homeworks numbered in week 1 and 2 with a higher weight than the other homeworks? Because this is a class mostly of managerial accounting, so budget is really important for you guys to nail. So that's why that is. Pay a lot of attention because these homeworks are really important for your final grade. And of course, we're going to have a final exam, and all of that. That final exam is going to be, of course, based on the information we present in every session. The exam is going to be both with some exercise inside Canvas with a multiple answer test, and also about content we review inside the class. The final evidence is going to be worth 55%. That is the 2 evidence. The presentation of the evidence is 55%. Both evidences are worth 50% of the final evidence grade. All the homeworks are worth 30%. You can see the individual weights there. And the final exam, it's 15% of the final grade. All of that, you get 100%. Do your homeworks. Have a great final evidence upload. And you can fail miserably or even not present the exam, and you will get a nice 85. So pay attention, do the homeworks, review the information we give you, and that will be, you will have like a good grade for the class, okay? Okay, so that's it. That's all for the introduction of the class. My class rules are actually pretty simple. Just pay attention, please. If you think I'm going too fast, interrupt me and ask a question. I don't have any problem if you are doing something as when you are in the class. Maybe you are eating, maybe you are preparing something else. I know these are really stressful times. The only problem I will have is that if I'm explaining something and you don't tell me, like, I don't understand this, teacher, and then you send me 20 emails asking me again one thing we review in class. We can have asesorías and private tutoring sessions. Of course we can, but the thing is that asesorías are not individual classes, all right? So pay attention on the classes and remember, point out the questions you have. And if you are maybe shy about asking the question in the moment, you can write me an email or send me a Discord message or something like that, just to tell me, like, teacher, I didn't understand this, like really specific questions, and I of course will answer you. But that is the thing. If you want to have your camera turned on, go ahead. I mean, I think it's easier for me just to see you and know who you are instead of just seeing like a blank a black screen or a letter. If you don't want, it's okay also, don't worry. The idea is for you guys to try and learn as much as you can in the circumstances that we have right now. So if you don't have any questions, we will dive into the content of today's session. Do you have any questions?
No, everything's good.
Not at the moment.
Everything's good.
Perfect. Okay, so I just realized I had the Spanish version of the presentation open. I need the one in English. Okay, there is it. Okay, so the first thing we're gonna do is we're gonna do an activity. We're gonna watch a video. And, well, I'm gonna show you where the video is, but I need to share my sound. Okay, there it is. We're gonna watch a video, and the video is about something we wanna review today. That is the cash flow. So go to modules. Check session number 1, which is the one we are in right now, and there is a video there. And I tell you this because you can do it later in your house, you review the course, and there is a video. And you need to download this file. Please download the file. It's a file of cash flow. When you download the file, you will find an income statement and a balance sheet. Ignore these colors, I'm gonna change it. And what I want you to do is download that, please. We're gonna be working on this. And you will find two formats for cash flow, and we're going to be working today on this format of the cash flow, and then we're going to take this other format of cash flow. Okay, so download that and let's watch this video, and then the idea is for us to comment on the video and you tell me what you think about the video and ideas that you have. And it's about cash flow, just spoiler alert.
Cash flow refers to the movement of cash into or out of an account, a business, or an investment. When cash inflows exceed outflows, this is generally considered to be a sign of good financial health, both for individuals and companies. Ed makes his living running Ed's Carpets. For Ed, cash flow is essential to the survival of his business as well as his personal finances. Having ample cash on hand ensures that Ed can pay his employees, his creditors, and himself on time, keeping the business afloat. The same goes for Ed. He needs enough cash in his personal bank account to pay for his house, his car, and other personal expenses. Whether we are talking about Ed or his business, there are generally 3 types of cash flows. 1. Operational cash flows refer to cash received or spent as a result of a company's business activities. For example, a business like Ed's Carpets brings in cash by selling carpets and sends cash out to pay employees and suppliers. Similarly, Ed pays himself a salary, providing cash flow to his personal account. Cash will flow out to pay for his expenses such as food and housing. 2. Investment cash flows refer to cash received or spent through investing activities, basically the purchasing and selling of assets that will help grow the business, or in the case of Ed, assets that will help increase his net worth. 3. Financing cash flows refer to cash received through debt or paid out as debt repayments. For a company, issuing stock, paying down debt, and repurchasing shares would count as part of financing cash flows. For Ed, financing cash flows include any cash coming from loans or other types of debt, as well as payments going to pay down debts. If Ed's business comes up short on cash and is unable to pay its obligations, it will experience a cash flow crunch. To avoid insolvency, Ed will have to arrange some type of financing or bridge loan. A similar situation in Ed's personal accounts would also have disastrous effects that could lead to personal bankruptcy if the cash flow crunch persisted. For this reason, it is important that businesses and individuals manage their cash flow carefully and set aside emergency reserves to cushion any unexpected events.
Okay, and side note over this, Investopedia is a really great source of information for finance concepts. It also has a school. Unfortunately, it's not available in Mexico. If you have NordVPN, I'm not sponsored by NordVPN, but if you have NordVPN or some sort of VPN software, you could take the courses. They are really worthwhile. So if you really like finance, I highly recommend you guys to check that page out. Okay, so I'm gonna stop sharing, and now what I want you guys to do is we're gonna go to breakout rooms, and let's take 5 minutes for this, and I want you all to talk among yourself, and I want you to discuss the video. I want you to talk about what do you think about the video, what do you think cash flow is important for, how can you identify cash flow in your daily life, how it's important for the business, all of those type of questions, all right? So let's go to breakout rooms. There. What do you guys think about the cash flow video?
Well, the cash flow is probably very important because it is literally what defines how much money you have and what movement you're having. So in order for a company to be stable and have well-managed finances, they have to have a positive or well laid out cash flow.
Exactly, nice definition. What do you all other guys think about it? Alejandro, Sebastián, Roberto, Emiliano, Nacheli?
Yeah, well, I think it can be a little complex sometimes for people to monitor every single penny that comes in and out of their company. But I think it's very important for you to do so, and the easiest way for us to achieve this is through the cash flow, so we know where our money is going, so we can cut down on unnecessary expenses and verify that our money is going into the right places.
Okay, great. Yeah, you are absolutely right. So discuss that idea, guys. It's the right idea. Cash is really important. It's actually sometimes difficult to track. Review actually can do it. It's a major advantage in finance planning. Discuss that idea, please. Yeah. So what do you guys think about cash flow?
Other than it's very important. Elliot brought up a very interesting point that he, in his personal opinion, he thinks that all the cash inflows and outflows should be reinvested into the company, such as like rebuying their stock, investing it into operating activities, etc.
Nice idea. Yeah, that's actually called bootstrapping. When you start a business and you don't get finance, when you start in like startup, when you generate positive cash flows and you don't rebuy stock or pay dividends or distribute the cash flow to investors, and what you do is reinvest all the money from the beginning, it's called bootstrapping. It's a really nice way to start a business. So it was Elliot, you say, right?
Yes.
Good, Elliot, you have the right idea. So keep talking about that. Good comment. Really good comment. Hello guys, so what do you think about the cash flow? And why is Brenda in 2 sessions?
Well, we were talking about the video teacher, and we were saying that cash flows were very important, not only in businesses, but in our daily life, since
Okay.
they're like the 3 types we just saw. And that it was very important because it's money that you have like assured in some sort of way. And well, it's really crucial to have it. And own.
Exactly, it's crucial to have it. And any more ideas like about how, for example, you could use cash flow analysis in your daily lives, budget planning, something like that? No?
We haven't discussed that yet.
Try to discuss it.
Okay.
Please, please. This is breakout room 3. So what do you guys think about cash flow? Is it good? Is it bad?
Yes, we were talking about
Is it useful?
not only is it good, but it's really important because otherwise you don't have a business, and especially in times like these, you really need to have some cash and some cash flow for certain events that may arise or certain things that you may need cash for, as well as the periods to come on for the business operations.
Great, Juan Pablo. That's actually really good. Some other idea from you guys, Andres, Fernando, Lilian, Maria, Jesus, Andres.
I would agree because like right now a lot of companies are having trouble with COVID-19, and so it is important for the companies to have well-structured cash flows that may prevent this type of situations for them to go to bankruptcy.
Okay, perfect. Nice. Okay, so I think that's it for the activity. We're gonna go to the main room now with great ideas, guys. Exactly.
Thank you.
Teacher, you're on mute.
I know I was in mute. Sorry, I just lost the button for mute. Okay, so we were talking about, well, we saw the video, we saw cash flow is really important, and you already discussed among yourselves, and so, I mean, discuss really interesting ideas. For example, one of you in the breakout rooms was talking about something that is called bootstrapping. That is, when you start a business and you don't have investment or loans, for example, and you need cash, then you generate cash from operating activities and you reinvest all the money inside the business. Really nice ideas, really cool. We're gonna retake that information in the future. Right now, we're gonna start with the class. The class of today, the idea is to review, it's not only income statement, it's financial statements in general. But then we're gonna review cash flow analysis, of course. We're gonna see the 2 types of cash flow analysis. We're gonna get into indirect method. And the idea is today for us to get here to indirect method. Why? Because the direct method is gonna be used for budgeting. And we'll explain that when we just talk about the budget part of the financial analysis managerial accounting. Right now, it's review income statements, then review the cash flow, and go back to the methods of generating a cash flow. Okay, so first thing you need to do is download the file I show you at the beginning of the lesson. I'm gonna show you how the file looks like. So if you already downloaded it, you should have the same information. This is the file. You got the same?
Yes.
Yes, perfect. So let's continue. Let's start with the very basics. I'm gonna give you a general glimpse of what is accounting and the financial statements. And as the level of dominion is actually C level, I need you guys to understand some like more technical stuff, but it's actually pretty easy. Just memorize things and understand them. So let's start with accounting. Now, when you go into a business entrepreneur course or a marketing course or something related with generating new business ideas, you most likely will see this thing that is called Osterwander Canvas, and you will spend most of the time working on the top part of the canvas, which is okay because business need ideas and all of that. But sometimes you will, not sometimes, most of the time, most of the classes I had when I saw this, the cost structure and the revenue stream were overlooked because those are the numbers of the company, yes, but accountants usually do that and people don't seem to realize that the main objective of a company is to generate cash flows from a financial perspective. Yes, you can have a company with a social objective or socially responsible. That is okay, that is perfect. We want companies like that. But the thing is that if those companies do not generate positive cash flows, the company will disappear. And if the company disappears, then, well, the objective is lost. So generating positive cash flows should be a main objective of any business and organization. So what is accounting? Well, if you go to the NIF, that is the Normas Internacionales de Información Financiera, and you look for the NIF A1, you will actually find the general principle for accounting and the general definition. And what I want you guys to know and understand and remember is that accounting is a technique to develop and comply with standards, information and standards. These are the words that you actually need to memorize. Technique to generate information that actually comply with certain standards, all right? Technique, information, and standards. That's what accounting does. And this information and these standards are not arbitrary. There is actually an organization that dedicates itself to review these concepts and generate these general accepted principles. In Mexico, it's called CINIF, that is Consejo Mexicano para Investigación y Desarrollo de Normas de Información Financiera, and they work to develop and keep updating the International Financial Reporting Standards, that is the IFRS. So in Mexico, in Spanish, you will find them as NIIF, Normas Internacionales de Información Financiera, but the name in English is International Financial Reporting Standard. So all the concepts, structures, and particular norms are set by each council in each country, and then they all get into an agreement to update the norms and change the standards if they want, stuff like that. I remember one change that actually I thought was a little bit, what's actually quite interesting, it's when they changed the financial statement of financial position to cash flow for the financial statements to reflect the inflation effect on an economy. Now we are in Latin America, and if you are from other Latin America country, maybe you have it more like more close to home because inflation is a thing in Latin America. It was more of a thing in Mexico in the 70s and 80s. Right now it's more or less controlled, but regardless, there is a financial norm, a financial standard that if we happen to be in what the financial norms consider an inflationary economy, you need to do a special evaluation to reflect that inflationary effect on the financial statements. So as you see, it's really important to have these councils to get together and discuss the techniques and the standards, because all the information we generate, all the financial information we generate from them, it's actually used globally. And this is a map of where you find the financial information. And why do I have this one here? Well, because the United States, they believe they have their own word, so they use the generally accepted accounting principles. But as of 2015, they are also issuing their principles or modifying some of their accounting principles to actually comply to international financial standards. Why is that? Well, if you see a map of the world where it's a requirement or of an option to use this one, you'll see that it's actually in all the world. It's practically everywhere. So if you want to be a financial professional, that is an accountant or a financial manager or something like that inside a company, and if you want to work in any of the dark blue countries, it's enough to know and understand the Normas Internacionales de Información Financiera here in Mexico to understand companies outside of Mexico. If you want to work like in Egypt, maybe, no, Egypt is here, I'm sorry. You want to work in Libya or in Congo or in something like this, maybe on the Middle East, you know, Iran. If you want to work here on, I don't know what that is, I think it's Saudi Arabia, whatever, the Philippines, or in North Korea. If you want to work in any of those countries, that is that light blue section of the map, then this information won't be useful there. But if you want to work analyzing companies from Russia, from Germany, from France, from Great Britain, from the United States, from Canada, from Mexico, of course, from Brazil, from Chile, from Argentina. The information that you know and understand in Mexico can help you know and understand the financial information of those countries. So that is why it's important for you guys to know that the international financial reporting standards exist. And if you know them, you can analyze financial information worldwide, except those countries I pointed out. So what happens with the accountant? Well, the accountant is actually the one who is going to develop the technique to take the financial operations and the monetary terms to classify, register, and summarize all that information and create databases. These databases are financial statements, okay? Financial statements. And this information is then taken to, it's used to take business decisions. So if you are an accountant, of course, you can take business decisions because you know the information from the very source to the end, where it doesn't matter if you are just if you are not just, but if you are the business owner or the board member in the company taking a decision, it's equally important for you guys to, if you are in that position, to understand what a financial statement is, that is from here, so you can take good financial decisions. And I can tell you this by experience. If you want to do financial analysis and you don't understand accounting, that is, you don't know how to build the accountant and stuff. No. What I mean is that if you don't know what is inside the accounting books, the financial statement, and you don't understand accounting, then it's going to be really hard for you to do financial analysis and take business decisions. So accounting knowledge is the base for financial analysis in corporate finance. That is why we are having this review of the course right now, because we are going to do we're going to do financial planning based on the financial statements, based on accounting information. So that's what the accounting is about. I hope that is clear for all of you. Let's move now to start seeing content of the class. And the first thing we're going to see is what is known as the 5 financial statement. That is, every company that you find listed in the stock market will have these 5 financial statements. And those financial statements are income statements, balance sheet, cash flow, changes in equity, notes to the financial statements. And well, this actually received other name. For example, the income statement is called profit and loss, like on the general argot, where I put here income statement because if you look for information on the internet and put income statement, it's most likely you will find a lot of information. But also if you put profit and loss, that's also correct. You will find the information you are looking for. The balance sheet also, it's also called financial position statement. Again, it's because of the norms and technicalities, but it has been called balance sheet for a long time. So if you look for information on the balance sheet, as I'm putting it here in the presentation, you will find a lot of information on the internet. The third financial statement is cash flow, and we already saw a video on cash flow. This class is mostly about cash flow. What I'm trying to tell you here is that this is the basic financial statement for small businesses. Actually, they mostly use cash flow statement and cash flow analysis to take on operations. And the other 2, changes in equity, and also the financial statements. The reason why they have this protection here is because these 2 statements are not that used. You will only use them when you, or generate them when you are an auditor doing an audit on a company, and then you need to create notes on the financial statements. I would tell you what that is, or just to write who owns the company or what shares have been issued. That is changes in equity. And for you guys to understand this more this clearly, I have generated these questions. So if you have the question of how much profit or losses you are generating, well, then you're talking about the profit and loss / income statement, okay? So this one is the profit and loss. If your question is how much stuff and money do I have? Well, you're talking about the balance sheet. If you then have the question about how much money, not profits or losses, how much money you are generating or spending, you are talking about the cash flow. And if you want to know who owns the business, you are talking about the statement of equity, changes in equity. And if you want to see side notes on the financial statement, you need to look for the notes to the financial statements. That's an easy way to identify each financial statement. If you understand those questions and memorize those questions, you won't have any trouble identifying each financial statement to actually answer business decisions. Okay, so let's start with the income statement. And I don't want you to memorize the norm. I just want you guys to know where you will find this information, like the original source. And the original source are the financial, the Normas Internacional de Información Financiera or International Financial Reporting Standards. And this is the article, if you want to see it like that, like the section where you can find the income statement. What is important about the income statement is that you identify that the income statement shows the profit and losses, right, generated for a business. And the profit and losses should be presented in a reasonable value and separated by income, cost of goods sold, and general expenses, all right, to separate profit and losses. And you separate from subsidiaries. Those are more technicalities for accountancy. If you decide to be an accountant, you will learn and understand that into detail. Right now, I just want you to know where you can find this information and what is that information about. So let's see what an income statement, like really general idea of an income statement you can find. So remember, this is how much profit I lost or how much profit I generate. And the basic structure of a financial statement, of income statement, I'm sorry, it's you have the sales, which are the revenues of your business. To that, you subtract the cost of goods sold, cost of goods of sale. This actually, you will find it as COGS, like as COGS. Cost of goods sold, that is correct. That's how you will find it in the internet. You look for financial information. And the difference between these two is already operative ratio. Because if you have a loss here, it means that whatever the hell you think your business is about is losing money. If you have an income there, it means right now your business is actually generating money. You only need to sell more and you will be all right. After that, you have the operational expenses. This is called sales, administrative, and general expenses. Sales, general, and administrative expenses. And after that, this is all the money you actually take to administrate and do the management of your business. Those are the general administrative expenses. The difference between those two, this one and this one, is the EBITDA. EBITDA means earnings before interest, taxes, depreciation, and amortization, and it's the most widely used metric for evaluating businesses. The ability to generate EBITDA flows. EBITDA doesn't include depreciation, but even though sometimes you have depreciation inside EBITDA and you need to take it out because maybe depreciation was part of the cost of goods sold, and when you are doing discounts on cash flows, sometimes you need to take that depreciation out. And lastly, you have taxes, and taxes is the government share. You deduct that from the EBITDA or operational margin, and you get the business profit. Let's see that with an example so you can apply or see this structure, general structure. And I know it looks like a really simple structure, but believe me, if you understand this structure, you will understand any income statement that you review. And just to prove myself right, I'm going to show you this. This is the income statement or statement of operation of Amazon. Okay, and if you see this and you apply the same information I gave you, you can see here that you have sales, then you have costs of sales here, and then you have sales and management here. This is cost of goods sold. This is sales. This is sales, general, and administrative. Then this one will be EBITDA. And of course, then you have interest, right? And then you have taxes, of course, and then you have the income. And because this is a company that actually shows operations inside the stock exchange, this has to be a comprehensive result. So you have earnings per share and information to use for the shareholders. What this means is that in 2015, if you own shares of Amazon, they were generating $1.28. And if you own shares in 2017, now they actually earn $6.30. 32 per shares. Just look this amazing business. I mean, look at it, man. If you invested here in shares of Amazon in 2017, you will have like 5 times the money, and that was pre-pandemic numbers. Just imagine how huge these gains on earnings, this basic earnings per share should be right now. But anyway, as you saw, you can use the same analysis, general structure for financial statements and income statements to analyze complex companies like Amazon. Okay, so that's the income statement. Do you guys have any questions?
No, teacher.
Perfect. Next statement is the statement of balance. It's a balance sheet, and this one you will find it in the NIF B6 or the IFRS International Financial Reporting Standards EAS1 or EAS 16. And the balance sheet, actually, the important thing is that you remember this: what the entity possesses, what the entity owns, and what the entity has as capital. All right. So if you understand these 3 things, you understand the balance sheet. So let's see it with a diagram again, so you can understand it. Okay, guys. So how much money and stuff I have? That is the question that this financial statement answer. All right. These are the questions that, this is the question that the financial statement answers. How much money and stuff do I have? And again, this is the information I put you here. Assets, what I have, what I possess, liabilities, what I owe, equity, the amount of capital that I have. And then you have it here, assets, liabilities, and equities. And check this out. Assets are all the money and stuff that you have. Loans, liabilities and loans and credits that you use to buy the stuff that you have as an asset. And equity, is equity free money? Well, not always, because equity could be losses and gains, and also investment that you get from third parties. That is maybe angel investors or financial funds, huge financial funds like BlackRock and stuff like that. So let's do an example really quickly so you guys can understand it. Let's say that you are actually working right now and you are doing home office and you are generating 20,000 pesos a month on a wage, all right? So your wages are 20,000 pesos a month. And we know, because of this one over here, which is the accounting formula, that assets equal liabilities plus equity. I am telling you that part of the equity are the losses and gains. You have a business and you make 20,000 pesos a month. So that will be a gain, all right? So that is assets is equal to liabilities plus equity. I don't own any money to anyone. So my assets will be 0 plus 20,000 pesos. That will mean that I have assets worth 20,000 pesos. And that will have a cash account with 20,000 pesos. You see, really easy. The money you have generated or invested in the business is the money that you will have as an asset. Now, let's say that you actually want to buy a laptop. You are doing home office and you saw your laptop is really beaten up, so you want to change it. And the laptop is worth 60,000 pesos. You know, you want the greatest computer out there. So it's worth 60,000 pesos, but you only have 60,000. So what do? Well, what I will do is I take a loan, right? So I will go to the bank and then I say to the bank, Mr. Bank, give me a 60,000 pesos loan, please. And with that 60,000 pesos, I'm sorry, the computer is worth 60,000 pesos and I already have 20,000 pesos. So how much money do I need? I need 40,000 pesos. Basic arithmetic operations is what you need to know if you want to be an accountant. So I go with the bank and I say, Mr. Bank, please give me 40,000 pesos on a loan. And now this one doesn't balance up because I have 20,000 here and I have 60,000 here. Wait a minute, we are saying that these here are the money, it's the money and the stuff that you have. The computer here, this laptop, it's something, right? It's stuff. So you need to register this as its value here. So let's erase this. And then let's do that. Let's write the value. And let's again go with this, with the general accounting formula so you guys can understand what I mean with this. So now I have assets equal to liabilities plus equity. All right? Let's start with the other half. So I have assets which are worth 40,000 on liabilities. This one is this one, and 20,000 on equity, right? I have money that I generated and money that I asked for a loan. So I know my assets are worth 60,000, right? And what are these assets? Well, they are no longer cash because I use that cash to buy something, to buy stuff. And the stuff that I bought is actually called equipment. I bought a laptop and it's worth 60,000. And again, these balances 60 and 60. You see? So that is how you read, how you actually assemble a balance sheet. Let's see with an example with money. And again, I know this is a really basic way to understand a balance sheet. Trust me, if you understand this way of fixing the balance sheet, then you will understand really complex structures. And here we have a really complex structure. This structure is Amazon. And again, here is the balance sheet, it's consolidated with all the subsidiaries. And we have assets here, we have liabilities here, and we have equity here. And we know that this one should be equal to this one. So if we go to total assets, you see $83,000 million. And if we go here to total liabilities plus equity, you have $83,000 million. And I say thousands of millions because these are in millions. That's really common. So what we can get out of this analysis? Well, let's try to analyze this balance sheet a bit and see that Amazon actually has a lot of money on cash. You see, cash. And I want you to notice something. Amazon has inventories. Why do you think Amazon, a technology company, has inventories?
Because they store the merchandise they're going to sell you. They have like big storage facilities where they send
Exactly.
you.
Thank you, Juan Pablo. And as you can see, if I see that they have inventories, I see, well, this company actually sells stuff. They buy stuff and then they sell it, all right? So they have inventory. And I want you to see something really interesting. When I analyze this balance sheet, I always get surprised. Look, account receivable, it's money that usually you are owed from your clients. That's money that you will charge to your clients later. And see how much Amazon is owed. It's owed as of the end of 2016, $8,000 million. Looks like a lot of money. But if I go to liabilities and I have here accounts payable, that is the money I need to pay to my vendors, that is to my suppliers of this inventory. Just look the amount on the account, 25,000 million pesos, right? I have 8 here and I have 25 here. It's almost like what? Like 4 times greater. You know what this means? It means that Amazon gets paid most of its sales on cash. And they have really a strong policy to pay like maybe 90 or I could venture to say maybe 120 days to their vendors. So if you were to analyze the cash conversion cycle of Amazon, you will find numbers like this on the vendors, and maybe in the cash, you will find 30 to 45 days. Which this actually will tell you is that Amazon is the envy of any large retail store. Like Walmart will be dead to have this type of information. And in that sense, Amazon is more like Walmart, that is like Microsoft or Google. Even though Amazon is an internet company, but its financial statements look more like the ones on Walmart because of the inventory, because of the accounts payable, because of the accounts receivable. So it's really interesting to know that. Anyway, so if you see this and you go to property and equipment, you see that most of the investment of Amazon is here. Most of the money is on assets, on property and equipment, and also on cash. But on cash, you have like half the money you have invested here. Just look at 2017, I have $20,000 million in cash, but I have 48,000 million on investment on assets. And where the hell is Amazon taking all that money from? Well, if you go down, you will see that Amazon issues a lot of stock, all right? They are kings at raising raising capital. Actually, Jeff Bezos had or has this incredible strategy of building a monopoly, and he went to all these funds in Wall Street and he told them, I have this strategy on building an internet retail company that will be a monopoly. All I need is for you guys to finance my operation for like 15 years. And when we finally start generating profits, it's gonna be all the market is gonna be cornered. And that's actually what happened. Amazon didn't generate a profit until like 2014, 2017, and it was founded like in 1998, 1990. What I mean is that it was almost 15 years without generating any profits. They took all their cash from investment. So that's actually really interesting. And we can see all of that just reading a little bit about Amazon and watching its financial statements. Financial statements tell us something. So that's the balance sheet. Do you guys have any questions?
No, everything's clear.
Okay, so now let's get into the cash flow. And now we are gonna get into solving a cash flow and understanding what a cash flow is. So again, where you will find the technical information about cash flow are these two sections of the NIF and the IFRS. The idea of cash flow is to generate, the idea of cash flow is to show inflows and outflows of cash, all right? So if you have the idea in your head, you already have half of the cash flow analysis figured out. You need to show how much money goes inside the company and goes outside the company, okay? And as we saw in the video, the basic structure of a cash flow, of any cash flow actually, is separated between operation activities, investment activities, and financial activities, all right? So you divide cash between those three activities to find the cash flows generated or spent during a certain period of time. Again, basic concept, how much money I am generating or spending, and the money can only come from operating activities, investing activities, or financing activities. Operating activities, it's sales minus cost minus sales, general and administrative, all right? That is net profit. Investing activities are investment on assets. That is equipment. And financing activities, it's loans and capital. That is raising capital like Amazon or taking loans to buy laptops. Okay? If you generate a profit here, you have a positive operating activity. If you buy assets, that means you are spending money, so you have negative investing activities. And if you are able to get a loan, you have a positive financing activities, you get money, okay? So have that in mind. That is the basic structure of cash flow. We're gonna review what that is with an example. There are two types of ways to generate a cash flow, the direct and the indirect method. We're gonna work on the indirect method first and on the direct method later. Why is that? Well, because this one is the most commonly used to reporting. But this one is most commonly used to budgeting. And you will see why when we move forward. Okay, so let's start with the indirect method. Please open your Excel, the Excel that you download, and we're gonna be working step by step so we can together create a cash flow by the indirect method, okay? Okay, so let's start with this. Step number one is that you need to find your income statement, which is actually at the top of your Excel spreadsheet. You need to take the net income and then you need to write it down in the first format of cash flow. And then the step two is that you need to figure it out, what are the increases or decreases of cash inside the balance sheet to actually take that information and reflect it on the cash flow. Sounds more complicated than it is. It's only about logic and patience. So let's do it. Step one, from the income statement, identify the net income and write it in the first line of your cash flow statement. Okay, so do this, please. This is an example. They are not the same numbers. We want to solve it with the numbers. But right now, just try and do it by yourself. So even though I'm going to be answering with you, try and do it by yourself so you can practice and understand what is all this movement of numbers. So you go to your income statement, you find your net profit, and you take it to the top, okay? And note, we are going to do something with the depreciation. Just have that in mind. I will tell you what that is, but we're going to do that. We're going to do something. Actually, it's here. We're going to retake that. But right now, the first step is just take the net profit and write it in the first line on your cash flow. And that is of the two formats you have on cash flow, the first format of cash flow, that's where you're gonna write the net profit. The step two then.
Sorry, teacher, is the Excel the one that is uploaded in today's activity, or is it the one, or is it in another place?
No, it's in today's activity. It's the one you downloaded and told me you had at the beginning. It's this one.
Okay. Then I have it open. Thank you.
And you have an income statement there, and you have a balance sheet there. Okay. And then you have cash flow, and this one is the indirect method, and then you have the direct method here. Okay. Okay.
Thank you.
You're welcome. So the next step is actually to identify the cash from operations, investment, and financing. We're going to do that taking just difference. And this actually is the easiest way to calculate cash flow. It has its difficulties, but it's just logic. And you just see the balance sheet, see how it changes, and then you figure it out what type of change on cash flow. So remember, and I'm taking it here, depreciation and amortization are added back. All right? Why are depreciation and amortization added back? Well, because depreciation and amortization, even though they are inside the income statement, they are not cash outflows. They're only like a accrual accounting way to recognize the wear of a machine, of an equipment, of a building. So as this is not part of accrual, as this is not meant to do accrual accounting with cash accounting instead, you need to take back those information information registers, which in this case it's depreciation. So depreciation should be added back. We're going to do that as well. I'm going to show you. But before we get into that, I want to tell you, remember, it's not that difficult. We just need to see the clients, the vendors, the liabilities, the equity, and see how those accounts change between years. And if you see how those accounts change between years, you can identify what is an increase on cash flow or a decrease on cash flow. Okay, so I'm going to show you some diagrams so you can understand it more clearly, and then we want to work on the Excel spreadsheet and try and do it by yourself so you can actually have questions and answer me. And if you feel I'm going too fast, please interrupt me and tell me, please, teacher, repeat that, okay? Okay, I guess. So operating activities. Now remember, you are looking for month-to-month changes. What happens in my vendor accounts and operating activity goes down between months? Well, what that means is that I am paying my vendors and my cash is going down. Think of it as if it was yourself. If you have to pay, in case you live alone, if you have to pay, I don't know, your water bill or your electricity bill, and you pay them, you are paying them with cash. So your bank account, the cash in your bank account decreases. What happens if I keep just collecting and for instance, saving without paying all my bills, all my electricity, water, internet receipts? Well, they will increase month by month, but also my cash, because I am not spending cash. So think about this. If you are not paying vendors, suppliers, services, then you are not spending cash. If you are spending and paying vendors, it means that your cash is decreasing, okay? Second type of account are clients accounts. And clients accounts go in the opposite direction to the vendors accounts. What this means is that if you have a client and the client account decreases, it means that a client is actually paying you, all right? It shows a good ability to collect the payment. If the client account increases, it means that you are not collecting payments and you actually have a lot of money of sales not collected inside your bank account. So your cash flow will decrease, okay? Let's see an example with this diagram so it's more clearly for you. First off, again, take the depreciation and add it up, okay? Take the depreciation and add it up. And let's see the changes on cash for vendor and clients. Let's start with clients. So I have here a client account and I have 60,000 pesos here and I have 70,000 pesos here. That is from month 1 to month 2, my client's account increased what does it mean that my client account increased? It means that I didn't collect 10,000 pesos. So it's a negative cash flow. It's change in account receivable negative because they are not paying me my sales, all right? The client account increased, so I'm not collecting that money. I subtract it from the sales. Is that clear, guys?
Yes.
Yes.
Okay. Next it's the vendor. So you look for the vendor account and you see the vendor account and you see 35,000 pesos here and 60,000 pesos here. What is this showing? Well, from month 1 to month 2, it increased. And what does it mean that my vendor account is increasing? Well, it means that I'm not paying my vendors. So I need to add up that cash because I didn't spend that cash. So I put it here as positive, okay? Are you sure no one has a question here?
I think not, teacher.
Just to clarify, on the Excel that's on the activity, there's no...
Exactly. That's the question I was looking for. What does it mean if I don't have vendors or clients accounts?
That we have paid the vendors.
That we have paid the vendors. What does it mean for the clients if we don't have a client account?
The clients have paid us.
The clients have paid us. You see, that's the question I was looking for. Good. Who made that question?
Me. Juan Pablo.
Nice. Good question, Juan Pablo. Okay. Now let's fill up the operating activity section of the cash flow. Okay, so let's do it together. Again, if you already did it, I would actually like if one of you share with us that information. With none of you, someone did it already? Who wants to share his or her screen?
I can do it.
Okay, Elliot. So I'm gonna give you permission to share. Okay.
Yeah. Oh. No?
Yeah, share your screen, please.
Yeah. This is the net profit of this one.
Mm-hmm.
And this is the depreciation of this one.
Perfect. And why don't you don't have anything in change in accounts payable or accounts receivable? Could you explain us why?
Because there's not any credit on...
Where?
Here, in the income statement.
In the income statement? Where did you see your cash accounts?
Yeah, it was here.
So you don't have neither clients nor vendor accounts. So what does that mean?
It means that their clients pay us right away. We don't give credit, and also with our suppliers, we don't give. They don't give us credit, so we have to pay them right away.
Exactly. Thank you, Elliot. Could you please stop?
Oh yeah, sorry.
So for you that maybe didn't get, and something that you need to change, only one thing, Elliot, and it's just about the format. I'm going to show you right now. So again, if you didn't get that, what you need to do is first you need to find the net profit. Then for the operating activities, you need to add up the depreciation because, well, depreciation is not a cash expense, it's just accrual accounting. And then you need to see the credit on your vendors and clients. I go to liabilities and look, I don't have any vendors, so I don't know money. I go up to look for my client accounts and I don't have any client accounts or any receivable account for that matter. So it means that nobody owes me money. So I can safely put 0 and 0. And then I need to put the changes, the cash generated changes in operating activity. So that will be the addition of these 3, okay? And then I have the cash generated from operating activities, which is the addition of the net profit plus the changes in operating activities, okay? That's the only part you were missing, Elliot. So do that, please. Elliot and company. And take your formulas and spread that to the right. Drag it to the right, I'm sorry. So you all got to that, guys? You all understood? Guys and girls?
Yes.
Yes, teacher.
Yes, teacher.
Great. So that's the information, net profit, the present amortization is added up because there is not a real withdrawal, and this is the cash, the business, meaning that all inventory and sales are paid, received in the same month. That's why they are in zeros. So everything is okay. Now let's see the investing activities. And again, it's the same logic. You need to find the accounts, then you need to find the months, and the changes between months will tell you what type of cash flow you are looking at. If you have an asset account reducing itself between months, it means that you actually sold an asset. And if you sold something, then you have cash in banks. So banks go up, you have more money. If you have an asset account that are actually increasing, it means that you are actually buying assets. So if you are buying something, what happens with your cash? Your cash decreases, okay? If you buy an asset, the cash decreases. If you sell an asset, the cash increases. Let's see with an example. You go to your balance sheet, you locate the property, plant, and equipment part of the balance sheet, and then you look at all of your assets. And I can see here that I have 1 million, 1,500,000, 200,000. Do not take into consideration the depreciation, all right? That doesn't count because you are already taking that in part of the operating activities. So we only look at this, and what I'm seeing here is that I actually have 1 million and it changes to 2,500,000. These two remain. The only one that changed was this one. So what happened with my asset accounts? They increased. And if my asset accounts increase, it means that I have a negative cash flow effect because I paid for them. So I go down and I put negative. If these were to be the same, what happens if I have 600,000 and 600,000? What does it mean?
That you didn't buy anything.
That I didn't neither bought nor sold anything. It's all there. And what happens if I have 500,000 and then in the next month I have 200,000? What does it mean?
It means that you sold 300,000.
I sold 300,000. And what does what happens with that 300,000?
You have to go to the cash, right?
And you put it positive or negative?
Positive.
Positive, exactly, Elliot, because you are selling something and now you have money on hand. Okay, so try and solve it, please. And is there another brave soul who wants to share his or her screen? You learn more if you do that. That's why I ask that. No? Okay, because you already shared, Elliot, I don't think it's fair to ask you again, so I'm gonna share mine, unless you want to.
Yeah, I don't have any problem.
Okay.
But I don't have.
You don't have it. Don't worry. Then I'll do it. Don't worry. Well,
okay.
Did you understand this? What? Who wants to
I
share?
didn't solve it.
Nobody solved it? Someone talked, but I didn't see who.
I think Brenda wanted to share the screen.
You want to share your screen, Brenda?
Sure, I'll share my screen.
Go ahead then.
Thank you.
Thank you.
I was just solving it right now, but the only difference I saw was in furniture and restaurant equipment. And IJ.
Okay. So what did you do? What did you do? I'm sorry.
I'm gonna do it right now, but
just do the first month, the column E, and we get into that difference. I'll do that. Solve the first one and then drag it. And it's a negative difference. So what does that mean?
That we bought
assets.
Yes.
Yes. Perfect. Thank you, Brenda.
No
So
problem.
that's correct. It's great. It's perfect. So what do you guys think? Do you all go into that same answer?
Yeah.
Which one did you select in the rest?
I'm gonna show my screen to show you the answer, so you can see which one you need to select. But it actually, I mean, Brenda did it correctly because she first found out which one were changing, and she said, well, these are the ones who are changing, so I'm only gonna do a subtraction between these two. What I suggest you to do is better is just to go ahead and write a formula and take all the assets excluding depreciation, because that way you won't, I mean, it will be less likely for you guys to make a mistake. You see? It's gonna be the same answer. Okay. Now, because this one is cash generated from investing activities, and we actually are buying something, we need to do this one plus this one, right? That is the negative when you buy plus the positive when you sell. And there you have it, it's a negative cash flow, okay? So it means that in this period from here to here, this one is not included. You invested on assets. You had a CapEx budget and you invested there, okay? Invested. Do you have any questions?
Yeah, are you going to upload the video sessions as always?
Yes, I'm gonna love the video sessions as well.
Thank you.
Would ask me something, Nayeli, if you want. Okay.
Teacher, how do you do the second one?
Which one? This? The one on both?
Yeah, that one.
Well, I just added them up. I know the first one is gonna be negative, so I'm gonna add to that one the negative. Or you can actually.
Okay.
I mean, I'm just adding them up. It's like what I sold plus what what I bought plus what I sold. So if I were to, maybe if the assets change here, what happened if maybe here, instead of this, I had this. And ignore this one because I don't want to explain you that. I just want you to tell me, what does it mean that I have this here positive? But I sold an asset, right?
You sold.
And to follow the format, what I will need to do is just to paste it here. See?
Okay.
Okay. Let's not do that. Okay. Great. So if there are not any questions, let's move to the final type of activities. And well, in the first period, actually, you don't find any changes. It's just until you just drag the formula to the right that you find the changes, and there you can actually, well, that's when you find the changes and you are good to go. Okie dokie. So next one. The last one is the financing activities. And financing activities are liabilities, changes in liabilities, loans, accounts, and changes in banks. So if you have a reduction in liabilities, that means liabilities are loans, credits, all right? So if you are paying credits, it means that your cash will decrease. If you are hiring or getting credits, it means that your cash will increase. And not only credits, it's also capital. All right, if you raise capital, a seed round, Series A or whatever you want to call it, and you raise capital and you get money that way, then you are actually collecting cash and your cash account will increase. And then if you pay capital, if you buy back stock, then you are selling capital. You are reducing your cash flow, okay? If you sell capital, you actually raise more capital and increase your cash flow, okay? So that's financing activities. It's pretty simple. It's just think about it as a loan. If I get a loan, I have more money. If I pay the loan, I have less money. Let's see an example again. So I have my 2 months here, month 1 and month 2. I have my liabilities, but in liabilities, I am not going to include vendors because vendors accounts are already included in operating activities. So I miss that one, I don't use it, and I go to my bank note, and what I see is that I had 600,000 here, and I have now 2,100,000 pesos here. The difference is 1,500,000. That means that my financing activities actually accounts, increased. What does that increase mean?
That you get that money, therefore you have more money due to the loan.
Money, therefore I have more money in my cash. Excellent explanation, Ayali. So, does someone wants to share his or her screen?
I can share it, but I'm not sure if I'll do it okay.
Don't worry. There are not wrong answers in this class. Only the ones I'm saying are incorrect. So let me allow you to share. Okay, sure.
Thank you. Well, I haven't done it yet, but I'm...
Do it live. We'll do it live. Do it live. You can do it. So first part of the analysis, find your liabilities and then identify your loans and all of that.
Well, here is the family loans. I don't know if there is...
Okay, family loan, yeah, that's correct. And what else you have? A mortgage.
Mortgage.
Total liabilities and 120. Because you don't have vendors, you can either subtract those two or take each one of those individually. Okay. So what do you need to do now?
Well, like I can use the total liabilities for this?
In this case, yes, because you don't have vendor accounts. But just bear in mind that if you were to have vendors and you use the total liabilities, you will be making a mistake because you already took the liability section in operating activities.
So therefore, in that case, we should subtract the vendors, right? In case we have them.
In case you have them, yeah.
Is it in paid or received liabilities?
Well, look how the liabilities change between months, like Brenda did with the investing activities. What is happening? Go up before you do something there. Just go up and tell me just with logic. What are you seeing with the liabilities? What is happening there?
But they are getting less.
Mortgage changes.
What?
The mortgage changes.
And the change is what? Greater?
Decrease.
It's decreasing. So what does that mean, Roberto?
Well, they're paying the...
They're paying the mortgage. So now go down. Where will you put it?
Right here.
Paid, exactly. So go ahead and do the subtraction. And now you have it positive, and check out what you did, because you did it like that in that the way you use assemble the subtraction. Now you have to change it as negative in the cash generated from operating activities.
Wait, sorry?
Right now it's positive. What you are actually telling me there is that you hired loans for 25,000 pesos.
So this should be negative?
It should be negative. And why it should be negative? Not just because I'm telling you, right?
Because you're paying it.
They're paying the money.
Exactly. Nice. Perfect, Roberto. Do you have any questions? So, do someone has a question?
No.
No. Okay. Let's go back to my screen. So this is how it's going to look, 25,000 negative, and because you are paying the loan. So let's see how it completes. Let's do it. Again, let's do the same thing that he did. He went back and he said, okay, where are my liabilities? My liabilities are here. Okay, I see this one is the same. Where I see this one actually changing. Someone has a question. Can you upload the video of the class? Yes, I will upload the video of the class. Don't worry. Someone had is like this, so it's decreasing, so it will be negative. So it's a pay liability. So I go up, And because if it's a pay, I need it to be negative. So I take the lower one and I deduct the greater one. And it's negative. And I have it changed here. So I'm going to do it correctly. It's this one plus the loans I will hire. And that makes it negative. Okay? Great. Is it clear, this one, for you guys?
Yes, teacher.
Okay, so let's do the final part of the cash flow in an indirect method. And that is to see if we actually got it correct. There is a way where you can actually find out if you did your cash flow correctly or incorrectly. And it's this one. It's these 3 lines here. And I'm going to explain how to use these 3 lines, okay? First one says cash generated in the period. And the cash generated in the period is this thing you are calculating. So you are going to add up all the cash from each of the 3 activities. So we go up and we take 67,000 because it's from operating activities. Then we take this one. In this case, it's 0 because in this period I don't have anything. And then I have minus 25,000. And that's the cash I generated in this period, 42,000 pesos. And I'm going to drag it right, and I have all the cash generated in each period, you see? That's the first step. Next step is the cash at the beginning of the period. And check this out. When you start a new month in your daily life, you start with the cash that you actually ended last month, right? So, for example, the money I have in my bank account at November 1st, which I think it was during the weekend, I think it was the Sunday, maybe. Sunday or Friday, something like that. The money I ended up in October is the same money I start off in November, right? So the balance of the last month is the money I starting up in the new month, in the next month, okay? That's just logic. That is, if you go to the balance sheet, this 30,000 pesos, it's the money that you ended up in this period, and it's the money that you started off in this second period. So I need the balance of cash I started with. That will be 30,000 pesos. I started in this period with this cash, okay? That's it. So I started with 30,000 pesos and I generated 42,000 pesos. So the last one is the cash at the end of the period, and it's just to add up these 2, okay? I take this one and I drag it to the right, and then to see if I have it correctly, I need to subtract. And this, what I'm going to subtract? I'm going to subtract the balance of the cash in banks and see what happens. The main idea here is that the cash that I have here as balance should be the same cash that I have registered in my balance sheet as cash on banks. So I'm going to take the 72,000 and I'm going to subtract the balance of this period in banks, all right? I'm gonna click enter, and you see it's balanced, it's 0. It should be 0, no difference. And I drag it to the right, and that it's correct, okay?
Teacher, could you show the formula for cash generated in the period?
Yes, in English.
Thanks.
Mm-hmm. Sure, I also got a bit lost. Where did you get the cash at the beginning of the period? Is it from the stock?
I got it from the balance of the previous period.
Oh, okay.
It's the 30,000 of the last month. So the next period is the 72,000 of the last month. Did you see?
Yes, thank you.
Okay, and this one is just the addition of these 2.
Teacher, and the last one, what do you do?
I just add them up.
Okay.
I just added them up. Mm-hmm. And then the very last one is like my checking account, like my checking subtraction. And that is subtract this one from the balance in banks. And there you have it. You see? It's 0, which means we did a good job. If you have a number there, you need to review your cash flow. So you all got 0.
Yes.
I guess you did.
Yes, yes.
Okay, so that's the last part. Keynotes for the Keynote for the indirect method. First off, this one is the most used method for reporting financial statements. That is why I am teaching you this method. Because if you are going to analyze financial statements for the company that you want, as it is listed in the stock market, you will find 95% of the time indirect method cash flow. So now you know how to build it, and now you will know also where the money comes from. But it has a problem. The problem this type of cash flow has is that it requires that you already have the balance sheet and the income statement information. If you saw when we were building the cash flow, it was actually the last statement you built, because you really need to have the income statement and the balance sheet. All right. If you don't have the income statement and the balance sheet, you cannot build the cash flow from indirect method, because you don't have the accounts to do the subtraction and addition and whatever to see how they are changing between months. So that's the problem it has. It is easier to make it this way, but it doesn't work for budgeting that much, because in budgeting you don't have the income statement and balance sheet already. You are actually doing like a forward analysis. So bear that in mind. It should give you the same result as the direct method. And actually the class ends here. Next class, we're gonna see indirect method. I'm sorry, next class, we're gonna see direct method, and we are gonna dive into budgeting. We're gonna talk about master budget. I'm sorry, we're gonna talk about cash flow budget. Then we're gonna see operating budget, and then we're gonna see the master budget, all right? CapEx budget, of course, and master budget. So you can have in pro forma analysis that information. You don't have any other question, guys?
We have to upload today's Excel teacher?
No, you don't have to upload it. That's for you, don't worry. What you do have to do in Canvas, it's go to your, I think there is a homework today. Don't worry about that. I will erase it. I thought I erased it, but I think it's not erased. So homework will be on Friday. Today, what you need to do is go to home, go to the problem case scenario, all right? Download this file and start reading the file. I need you guys to understand and focus on the information provided to the accountant, all right? I need you guys to understand, like, you are not gonna build anything yet, but you do need to understand all the information listed here, okay? Identify the cost, identify the expenses. We already saw income statement, so you already know what is sales, what is cost. You already had a cost accounting class, I think, so you already know what is unit cost, what is normal capacity, all of that. So just do that. I'm not gonna review that homework, but it's going to be a homework for for Friday to deliver on next Tuesday, something about the case. So please start reviewing the case, all right?